Hello, everyone. Happy 2023. I'm super excited to resume my videos. I am so happy that I am here to help you guys turn the page on your trading journey. So, this year is a phenomenal year. I have so many amazing, phenomenal things that I'm going to be doing with you guys, and resuming my YouTube channel happens to be one of them. So it is just an absolute dream for me to do this once again. So today, I wanted to start off with something not too heavy. I want to talk about getting that directional bias. And one thing I would like to do is I don't want to have long videos like before. I want our videos to be short, sweet, and to the point. So, how do we get our directional bias? I've always spoken about the 50-200 trend. So, when the 200 is above the 50, we are looking for selling opportunities. And when the 200 is below the 50 or the 50 is above the 200, we're looking for buying opportunities. Now, how do we know when to buy and when to sell? Because that is really what makes you money, the ability to buy at the lowest possible price and sell at the highest possible price. But let's look at the 50-200 trend first. So, if you look carefully, okay, this is not a very good example, but if you look carefully, when the 50 crosses above, we have buying, and when the 50 crosses below, we have selling. So, where would be a good place for us to take these buy trades? Well, in an uptrend, you want to have a lower shark fin. As you can see, we had a lower shark fin right here. And then when price comes and crosses, the RSI crosses the signal line, that is a really good place for you to buy. Or you can wait for price to close above the 50 EMA. Either of the two is fine. Stop loss about at the low of the day, about 30 pips or so. You can go for a 1 to 2 risk to reward ratio, 60 pips, and you are done. Easy, easy, easy trade. Once again, you have a shark fin. When price closes above, crosses the signal line, really good trade right here. It didn't exactly close above, but it's a good entry. You have your 48 pips stop loss, let's say 50 pip stop loss. You can easily go for 100 pip take profit, 1 to 2 risk to reward. Once again, you had your really good trade right here. This one you would have lost because it came and it stopped you out here, but that does not phase us market makers. Guess what? Another entry here, and you would have caught about 39 pips to the upside. Okay, that would have been a 1-to-1 risk to reward ratio. Okay, let's look at another pair like gold. A lot of persons always feel intimidated by gold, but it's nothing to be afraid of. Let's go. So once again, you have your, let's see. So we have our 50 crossing above the 200, shark fin, and you had your nice run. Price never came back to this point. Okay, and you had what, a stop loss of about 56 pips. Let's go for about 100 pips, 100 pips locked and loaded. Okay, let's go again. We have our shark fin here. It crossed somewhere here and it would have faked you out, but then by the moment it crossed back above your 50 EMA, you had a stop loss of about 130 pips. Let's say you go for 260, 260 locked and loaded. Once again, you have your shark fin here. When you have price coming and closing above, somewhere around here, your stop loss is about, let's say 30, 40 pips. You go for an 80 pip take profit, 80 pips out of the park. So, as you can see, and you can go back in history, more times than not, you're going to get these really good trades. They're fantastic, they're in line with the trend, and what you're really looking for is that sort of pullback. It's like a rubber band effect. It pulls back and then it launches in line with the trend. Is it going to play out 100% of the time? Absolutely not. But once you're in line with the trend, you have a high probability of price going in your direction. Thank you so much, and definitely looking forward to being with you guys in 2023.